Hello and welcome to Accounting 200, Survey of Accounting, Fall 2020. My name is Oliver Feltus. I'm a retired accounting professor from Eastern Kentucky University, and I'll be teaching this class this fall. It's, as you know, all online. So I won't be keeping office hours in the Business and Technology Center, but I am available through email and through the virtual office on Blackboard. So if you need to see me or talk to me, we can do that. In-person meetings can be arranged, but in general, I find that online students prefer to meet online rather than in person. Let's talk about what Accounting 200 is all about. It's a survey of accounting. A survey of accounting means that we look at both financial accounting, which is the recording of financial events, and managerial accounting concepts, which are taking the records in our financial accounting and making management decisions based on that information. So you're going to learn skills that you will need to prepare and evaluate financial statements, and you're going to make recommendations to management or for your own use based on that information. In the syllabus, this is what we're looking at, page 1 of the syllabus, we have the student learning outcomes. Let's look at each one of those individually, and I'll discuss what those mean. It says, upon the completion of the course, students will be able to apply knowledge and skills from the course to provide definitions and phrases used in accounting and finance. If you don't understand the terminology, then you can't understand what the problems in the textbook are asking you to do. So like any course in a new area, one of the first things you have to do is memorize and understand the terminology. In financial accounting, we're going to take a look at a single business event, and then we're going to record that information and see how that information changes the financial position of the business. By financial position, we mean that the debt ratio, the equity ratio, the amount of assets the company has, can they pay the debts, can they not pay the debts, are they going to run short of cash, those kinds of things, just the basic financial health of a business. We're also going to prepare the 4 basic financial statements, which are the income statement, statement of changes in owner's equity, balance sheet, and statement of cash flows. Those are the 4 basic financial statements that all companies prepare when they prepare their annual report at the end of the year. This is important because that information is provided to lenders and to owners to appraise them of the financial position of the firm at the end of the accounting year. Most companies end on December 31, so the financial statements are prepared after that, sometime in January or February. That's financial accounting. Managerial accounting looks at a company's products, its services, how much do they cost, what kinds of behavior, what happens if we increase volume to production, or do we need to hire more people, those kinds of things. So among other things, we're going to differentiate between product costs, general and administrative costs. Product costs are those costs that we incur in order to produce a product which we're going to sell, or a service that we're going to provide. General administrative costs are those costs that every business has. That's things like rent on the building, utilities, telephone, equipment, all those things. Cost behavior, which is another thing we're going to look at, is that as the volume of business that we do, as the number of products that we make or sell, or the number of services that we provide, as that volume of business increases or decreases, then our cost increases or decreases. We assume that we're selling the product or the service at the same price, but as the cost increases, then we're making less profit. As the cost decreases, we're making more profit. So it's important to know what cost will increase or decrease as we buy, or we sell, or produce, or provide more services. We're also going to look at budgets. Budgets are just plans, financial plans. If we're going to provide more services, how much more is it going to cost? Are we going to be able to finance it, or are we going to have to borrow money? And finally, we're going to look at relevant cost and revenues when we're looking at special decisions. Basically, that's things like, if we're making a product, have we got the capacity to make that product now in our current facility, or are we going to have to build a new facility? If we're going to build a new facility, is it cheaper or better to produce that, build that new facility in the United States, or is it going to be cheaper to build in China? That's just a basic financial decision that we have to make. So those are the things that we're going to be doing this semester, and we'll talk more about that when we get into the intro to Chapter 1. But this is the first page of the syllabus, and we will now go to page 2 of the syllabus on a different